Hello, really Prima people are having an amazing, blessed. I almost said Monday morning. Jesus, why do I love Monday so much? It's currently Tuesday and it's 37 minutes past 11 a.m. here in South Africa, and I have a headache today, so I'm not going to be doing too much. It's just going to be a nice tape reading session, and we primarily going to focus on 3-hour ranges. So we don't need to go to a higher time frame because the ranges on the lower time frame are already on the chart. You know, if you want to go to higher time frames, I don't know. There's no need for that. You can, if you're looking for a hard-lined bias, then of course you can. But then just by watching how every hour just opens and trades will give you a very clear depiction of what the market is currently trying to do. So what I'm looking at first is obviously first inefficiency. Post 3. So this is the first one, and the one my brain is focusing on is, you see, this is sell side inefficiency. If you look through charts, there's a small buy side inefficiency right there. It's a bit too small in my opinion, this one right there, which is kind of what I'm using for potential long, with your stop loss just right below here. But in my opinion, you can actually look at this baby here, which is a lot larger in terms of range. And I'm looking to see, does the market want to gravitate to potentially the previous 2 hours high? Or that baby there, which is my current draw. We have sell side liquidity here, which is 1 a.m. And we have the 2 a.m. as well. So that gets swept efficiently, cleaned out the financial market. So now once it does that, that means it has cleared sell side liquidity. And the gist of my model, this is what I want you to understand. One of my students yesterday sent me a long ass paragraph, but he's basically asking about swing highs and swing lows. So when I give you the first presented inefficiency, what I'm trying to give you reference for is, first of all, so what I'm trying to do is, first of all, I'm giving you a reference point to study, to look at any given moment in time, right? Let me do this at the top. So I'm giving you a reference point to study at any given moment in time relative to what this reference point does, meaning the first inefficiency post 3 a.m. Let's say for here, for example, it took out sell side liquidity, very sensitive. Sell side liquidity. So what did I tell you? Once it sweeps sell side liquidity, whether it's the 2 a.m. low or the 1 a.m. or even the o'clock low, right? From o'clock to 1, leave that low in and out of itself. Once it sweeps that at a specific time, you can look at that reference point for either offsetting, because what we're basically doing is we're trying to anticipate swing highs and swing lows, forming at inefficiencies. So now if you don't have a predetermined time, which is from 3 to 4 o'clock, in which a potential swing low for that hour will form, where the next hour, which is 4 to 5, does not trade below the 3 a.m. low, then you don't have a model to work with, right? You genuinely don't. So that's what I'm kind of trying to translate this year. And it's not going to be easy because obviously, you know, I'm going to fall victim to myself as well. I'm not perfect, you know, I'm not the best teacher, but I do like showing off. So the fact that you guys watch me, and my student allowed me to literally share, you know, his public model with you guys, it's a blessing in and of itself. So technically it's a privilege. I must be very grateful, because I would have said no, in my genuine opinion. But yeah, that's basically what we're doing. So whenever we get to this reference point, the 3 a.m. inefficiency, what you're doing is you're just keeping your eye on it. You don't need to trade it first. That's the problem. The problem is you're always looking to execute, to make money, and you don't give yourself time to get to understand the model. And let's say you miss this entry, my brain will go along here for a day read. Yeah, even within this inefficiency in and of itself, I'll be smacking longs. We had a much deeper retracement than anticipated. In my opinion, I really thought we already used this inefficiency there and then ran higher, but the market is awfully manipulated today. We do have a news event tomorrow, so be wary. Anyway, so this will be a beautiful entry long. Even now, as current price is printing, I would genuinely smack longs here using this range. And you can put your stop just below there. My opinion, my stop just remains there, and we're using this as a potential entry model. And anything else is a pyramid. I don't like this color. Let me use green. Green is like stop and go. Yeah. So literally that's what we're doing. So now we're in this inefficiency. This is where you guys get it wrong. So here you want to go short. You're wondering, why aren't you going short, Alfred? What I'm doing is I'm expecting 1, 2, 3 to engineer sell side liquidity or buy side liquidity. It does not matter, because this is when the model starts. This is when the algorithm begins to kickstart. Alright, and this is when I study the liquidities formed. So I'm using time here, right? That's the first variable. I need time, because if this doesn't print these 2 hours, then I don't have a range to work. I don't have anything to work with, right? I literally don't. So I have to wait for this, and then I have to wait for this, which is my literally most important one. And what we do relative to this range at the 3 a.m. hour will predetermine what we do later on in the session. So that's kind of what I'm anticipating here, where we had 3 a.m. blast through this low, which makes it a high probability inefficiency. Comes back, we find sensitivity, drop lower for sell side, and we begin to run up, clearing this. So in my brain, there's 2 things happening here. This is a shift in market structure. Right when we trade above this. And now we began a retracement from here to there. And we traded into 50%. And what's the nearest form of fair value at 50%? The second buy side inefficiency. Or it's actually the first. Technically, it's not the first because of the small one, but that, this and that. Pick what you want, man. Pick your poison. So anyways, but now once you have this reference point, it becomes easier for you to see if it's going to continue to extend. It doesn't really matter. But now, let's say, for example, you can't discern what the first inefficiency post 3 a.m. wants to do. Wait for the whole hour to print. Because once that hour prints, it will be either below sell side or above buy side. And it will give you an opportunity to enter between the 4 to 5 o'clock hour, targeting the external range. And this doesn't form every day, but the model in and of itself, the case study, forms every day. And you need to discern the function it will play. Will it play inversion today? Will it play breakaway? Will it play this? Will it play whatever? It doesn't really matter, but you have to discern that as an executor. And if you can't find that, then you're basically wasting your time here as an executor. And you need to get to a point where you're well versed in your models, and you know when you are going to get it wrong and why and where. You know, so like if, for example, the way I look at it, if I'm wrong here, it will use the first inefficiency, this one right here, this range, to drop price lower. So price gets a lot more advanced over time. You'll see me when I live trade, because my experience is going to leak out. Right, I'm just going to say, watch this, or I expect this time to do this, I expect that, I expect this. And those are times you can make note, but always know that I'm using this as a reference point. So anywhere in here is a potential longing opportunity, and I'm just waiting for time to begin spooling. I won't tell you what time. You'll see it. But it'll be fun once I have more people watching. Then I can just start flexing times. But for now, nah, just keep it to myself. Post 03. Here we go. So I'm going to keep it like this. So I won't be moving my chart much. The only time you'll see me do that is when I'm nervous, or when I think I'm going to get it wrong. So you should also study that when you're studying my journal. So usually if it's clean like this, when nothing moves, that means it's either going to happen or I'm going to get stopped out. There's no if, when, buts about it. So the first mode of buy side I'm looking for to see if they can chase these 2 babies here. So we have that high there and that high. So I'm looking to see if does the market want to gravitate towards that and blast and continue to take out those highs, and then ultimately there we do have the first inefficiency post midnight right there. So I want them to blast past fair value, past liquidity into fair value. You get that? So that's how they kind of use liquidity and fair value. For example, like think of it this way: if me and you are the only people who know this game, and our goal is to cheat, How are we going to cheat? We'll know the variables of time, not necessarily price, because this thing changes over years. It's 24,000 today. When I'm trading 10 years from now, it could be even 100. 100K on that would be beautiful. And I think I'm going to live long enough to see that, because the technology is evolving at a rapid pace. But for example, we know this can fluctuate, but what remains constant? It's this time. It will always be 3 a.m., 4 a.m., 1. We'll always meet at a scheduled basis. So now let's say, for example, I say from 3 o'clock to 4 o'clock, I want you to study something, the first inefficiency post, 3 a.m. Then this is the one that forms. And what is it going to do first? It's going to sweep sell-side liquidity. That's the function it will play today at that time. So it sweeps sell-side. And now what we're looking for is when can we offset the orders that were cleared during this whole run. The nearest form of buy side is there, which is literally the previous hour's high. This right there. It's literally 3 hours high. And that's basically what my brain is seeing. And every day I look for this. I look for where can I pair orders? Where can I pair this function? Even this, let's say you missed this one and you don't like it, and then you see this one, which is the first buy side. It's just beautiful actually to watch, but I don't want to talk too much on that, because then you're going to start asking me questions, and I don't want to know that. This is your main focus. This right here. Everything else is just cherry on top. Let experience guide you. But this one, you need to learn. When we touch it, what do we do? Sensitivity or no sensitivity? We touch it. Do we begin to spool and opposite? And when we get back into it, how do we treat it? And that does not mean this is go long, go short as soon as we trade into it. You need to understand whose orders are you offsetting relative to inefficiency and liquidity. So all these orders here, the first inefficiency post, 3 a.m. is being paired with the first inefficiency post, o'clock. And I'm grabbing these orders from fair value after grabbing liquidity into liquidity in a form of fair value on a higher time frame. So that's basically the gist of the matter. A beautiful expansion high as expected. Screenshot. So these are the videos I don't really share. I have a lot of these. So I literally just record, I trade, I execute, and I don't usually speak to myself, but I have these and I annotate them. And the way I annotate them, it means something to me as an executor. It's not the same for you. For you, it might be very different. You might need to put, and I don't have time to write these things down. So I just have these markers for them. So you'll notice this stands for an inefficiency. Then blue means for buy side inefficiency. This one, if it's above the marketplace, it's sell side. You get? So that's kind of how I look at it in terms of price. So if you see me screenshot like this, and also I'm looking for maybe a pause sensitivity, it doesn't matter. It usually depends on the model or the profile I'm studying at that current moment in time. So we should see spooling in the next 10 minutes heading into 5 o'clock. If we don't, then trade setup is null and void. So this is what we're going to be doing. Oh, love. Wow, that's nice actually. London session. So this is what we're going to be doing for the 6 to 7 o'clock hour every day, hopefully. I can't promise you all every day, man. That's a bit too much. Potentially close all positions. So that's what I'm going to be teaching you, how to anticipate swing highs and swing lows. That's basically the gist of my lecture. I would take partials here. It's a beautiful place to take partials, and maybe move your stop just below that. And if we do trade into this fair value, then you just dead ass wrong, because that's a deep retracement from where we currently are. And if we're to have that, then I wouldn't advise you we be in these market conditions, because from here to there, it's like literally 75%. It can do that. I don't see why it wouldn't, and then leave 2 highs or 3, all these, then run them later. That'll piss me off. Okay. But yeah. But we're still looking for this inefficiency to perform support of support. So we traded above it once, came back, a deeper retracement into one form of fair value, then we came back into it twice again. Beautiful spooling. If you took this inside this fair value, it's beautiful. 19 handles, a 20 handle model right there. It would have been a beautiful scalp. And if you waited for that fair value, you might have missed it, but I would have traded anyway in here. So So I love seeing when it does this. So it gives me potential higher prices. And I want you to notice something. I never started on higher time frames today, right? I don't need, you do need that, of course. But when you gain experience and you know the reference points and how it uses reference points and the displacement, how big it is, where it forms, when it forms, at what time it forms, then it's much better. But if you don't have these things, then you're just running a loss, literally. You're genuinely running a loss. So now we've taken the range high, we've taken the range low, and we're currently in a potential small consolidation here. So if by 5 we just stay here, if we do trade below 50% into that inefficiency, that's a cool entry long. Our pyramid, like 5 o'clock opens, trades lower, and then you can expect it to really finish it off. If not, then I'm not going to be with you guys here too long. Most probably going to be here for, it's only 16 minutes, feels like 16 hours. So I'm going to be with you guys for maybe an hour or two or less. So if you do trade into that, that's the reason. Because why is this a dealing range? If we strip everything here and we have this baby here, which is the swing high, and we have that swing low right there within this hour here, from 4 o'clock to wherever the current time is, this is the dealing range. So when you have this right there, you don't want it going below this low. This is the external range liquidity. You want to see it take out internal, not external. So this is a protected low in my opinion. And I want it to stay within the upper 25%, preferably like upper here, and we begin to just see spooling higher. 50%, I don't want it to give that much of a discount. I don't see why they should. If they do, then it's okay, but that's the thesis behind it. So I'm looking at this. This don't matter. I'm looking at this range. What have we done? We've swept sell side, we've swept buy side, and we're currently back heading into an hour. So in that hour, I'm expecting spooling to external range liquidity. Whatever side, you can get it wrong. You can say, I'm expecting it to now spool higher. No, it could spool low and just go for that. And that's okay. That's where the lessons are learned. But with my experience and my guidance, hopefully, I'm good enough, you'll be able to see it relative to me. So you want to see like stay in this upper quadrant or the upper half like that. If we go lower, it's okay. It's still discount, but preferably you want to see that. But anyways, it's kind of the gist of what I'm looking at. But everything is just this. As expected, we are seeing spooling higher. And heading into next month, I don't want to hear this thing of audio quality. I don't want to hear none of that. I don't want to hear none of that. I don't want to hear none of that. Because I'm not here to entertain. I mean, this is literally my recordings for myself. So I don't need it to be perfect. I don't need it to be the best thing since sliced bread. I don't need to sound like an angel. I need to make money. So thank you very much. So what I'll do is I'll take partials here, in my honest opinion. I'll wait for o'clock to begin spooling if it does, but this is a perfect place to take partials. And when I say take partials, I mean take partials, like literally take partials. Just to give perspective there. We are in an execution here, which is beautiful. From that same low. Sadly, it's one contract, so I can't take partials, but what we can do is we can leave it for the first inefficiency right there. And you can move your stop to break even. In my opinion, I'll move it just below that low there. And I'll explain the thesis behind the execution in and of itself. You can see the execution orders. So first entry was when we traded back into the first inefficiency. I really thought we were going to spool higher. We had a much deeper retracement. My stop was just below that low. So we swept it, and I used that same first inefficiency as a reason for long at exactly 0436, which is a swing low, a 3-minute interval. I won't teach that. That's hard, man. That's impossible, but we will learn with time. And from here, right up to there. It's beautiful. In and of itself, using the first inefficiency, got traded with you right when we inside it, expecting spooling to those relative weaker highs, and then ultimately to that baby and target up there. That's kind of what I'm looking at. And we can trade back into that. If we do, that's ugly price action. So I don't usually have these on my chart. I don't need to. Doesn't really matter. I'm here to read price like a book. And when you have money involved, especially a large sum, it becomes and you're also talking, becomes almost impossible, to literally manage yourself and manage your thoughts simultaneously. So the lowest form of contract is the best. No need to rush anything. And we have a whole trading year ahead of us. It's 2026. It's going to be the best trading of your life, It's literally going to be the best trading of your life. So yeah. It's literally going to be the best trading of your life. That's ridiculous. Can't believe that. Like, where would you meet a guy who's willing to just sit with you guys and read for you price action? I think with this degree of this insane level of accuracy, it's zero. But yeah. So I'm going to also be doing lives a lot. Like, I'm just going to start testing to see if it works, see what the problems are, the lag time, So in my opinion, I would close all positions, even though I would love to hold for target, I just want to show my students that you don't need that much, and I would have loved for it to go for those eyes. So we'll keep it a buck and call it a day there. Just above that swing high. So if this o'clock displaces and pushes above that high, that will be preferred. If it doesn't and begins to trace lower, you can expect it to just sweep above that buy side. Would have been nice. One of my students is like, they're searching for me, and now I'm searching for them, bro. I'm searching for them. They ain't searching for me for none of that. So I would close all positions, yeah. This is where greed is tapping me on the shoulder, like, oh, they just hold it for 2 more, 3 more minutes. Ain't gonna happen. Thank you so much. Just another day in the office. I will see you again, same time, same place. So you should expect it to at least clear buy side before end of the day. Let me change this to buy side liquidity so that you don't think I'm giving you all a bias or something. And I'm going to enjoy these live sessions so much. Change this to a different color. I'll just remove it entirely. Yeah, that's basically it. And this can remove it entirely. shift the market structure. Don't need that. Don't need that. Just need this. There we go. Hope my students don't kill me and say, "Oh, V, you didn't close your positions before 5 p.m. Anyways, I'm just trolling, man. Thank you guys so much for blessing with your ears, and I'll see you again same time, same place. Let me give you 5 more minutes. We still have 5 more minutes, so let's see if it is going to even trade today. But this is the gist of trading. You need to just get here on time and study it. You will get it wrong, and when you get it wrong, that's where the lessons are learned. And don't be afraid to do it once. Don't be afraid to have a stop loss, and don't be afraid to get it wrong, because you are going to get it wrong. And there's no need to re-enter as well. The only reason I'm doing that is to, it's just, it used this reference today and not that one, and I'm mistaken. I could be wrong. I'm human, you know, and that's where the trader in me, the analyst in me, you know, that's where he really works hard. But anyways, thank you guys so much for blessing with your ears, and I'll see you again same time, same place tomorrow.